Hi traders, this is Forex Nelson and I'm back again today with another training video for my Super Sniper trading system. And this video will be called How to Trade the Asian Session. Keep in mind you can trade all three sessions with the Super Sniper. Now also, remember you must get in front of the computer about an hour before you're going to start trading and make your daily trade plan. It is very important to have a daily trade plan, and it has to be a different one for each and every trading session, because the market, as it's moving either up or down, it'll change the plan. So right at 5 o'clock right here, you want to wait for a minute or two after before you pull the trigger, as you do not want to be dealing with swap rates. Now just notice that this meter right now, the euro in real time, is a bus driver. And I happen to know that the euro Aussie dropped quite a few pips on this day. This meter, always keep an eye on it, because when you see one or two bus drivers, you're going to get some pips. Just wait for a slight pullback and then get into the trade. So remember, 20 or less is a bus driver for selling, and 80 or more is a bus driver for buying. So in this situation, selling the euro Aussie. Also keep in mind, during the Asian session, pairs like the euro CAD, euro dollar, pound CAD, pound dollar, and the dollar CAD, they are generally not going to move very much because the market is not even open. But there will be days that you can certainly grab some pips, depending on what's going on in the world. And speaking about the world and news, make sure you keep an eye on the calendar at Forex Factory. So once you see the two moving averages, three of them actually, crisscross here, and then every time it comes back around the goal line or the T area, you're going to pull the trigger. So either here or here, right on the goal line, you can take the trade with 11 pips stop, and just down to there alone is 58 pips. And as you can clearly see, it just kept going. And this would have been a good example of how to trade with a day job. Put in a trade, and then you're going to wake up in the morning with pips. Look at how many. If you get about here, that's almost 100 pips. Just watch that video called How to Trade with a Day Job. Due to the fact that I cannot show every one of these Forex pairs, as some of the markets are not even open, so let's look at another example on the Euro Aussie. So all the three moving averages are in proper order, the 20, the 30, and the 50. Now if you did your trade plan or checked the higher time frames, you'll note that we're selling. So in other words, I would put an arrow anywhere in here, but then I still have to wait. This is not quite enough. This is close. This is good, 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 and good. So let's say we get in around here. Stop will be about 17 pips, and down to there is like 48 pips. And of course, you can manage a trade and collect more pips if you so desire. Okay, let's take a look. Remember I said the Euro CAD, the market's not even open. So let's try the Euro Yen. Here we go. First thing I would notice is that we're in a nice uptrend. And remember, nice uptrend, the gold line's up and we're above the water line. Well, that automatically qualifies for a great way to trade. Drill down the lights. Let's say we're buying. I would put an up arrow around here, somewhere in here. And if I can catch it here, or here. That'll be great for locking in more than 60 pips. Now in real time, these candles here, if you drop it down to the 5 minutes, will be much, much closer to the goal line. Now don't ever buy up here, because guess who's going to be crying? You'll be down more than 60 pips. But once it starts bouncing here, and the TZ is down at the bottom, you can get in with a 10 pip stop, and up to there alone is like 37 pips. That's why it's very important that you wait for the pullback. That's the magic word. And the golden rule is take the trade as close to the goal line as possible. See if we can find another example. It's not a huge move, but let's assume the trend is up. Moving averages cross around here. Let's see if I can get this, blow it up a bit. If the trend is up 4 hours, let's say, daily, whatever, put an up arrow in here. We must wait, like don't buy here. Wait for the pullback to the T area or the goal line. Here, here, or here, you can pull the trigger. And that's producing 23 pips. And if you want to hang around, because you're going to stay up a few more hours, which I am not, that's about 60 pips. And of course, as you can clearly see, it kept moving on its way up. And this would be a very good example of how to trade with a day job. Moving right along. Euro New Zealand, this is a great one to trade. Moving averages cross over here. Make sure you trade a minute or two after 5 p.m. so you don't have to deal with swap rates. Put an arrow if the daily trade plan says to buy. So every time it comes back in the T area or the goal line, get in. So here, 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 and here and here. So let's say we get in here. We have buy signals here. We have buy signals here. So if we get in here, look at our stop. It's 7 pips or maybe 10. Up to there alone is 56. And it just kept going for a lovely 95 pips. I'm going to show you another example. And one thing I've noticed is that on the weekend, so this is Friday, Sunday night at 5, the midnight, this is Monday, I notice many times over the weekend, on Sunday night is the best night for trading Asian time frame. So assuming that your trade plan is saying to sell, and it really looks like that to me, you must wait for the pullback to the goal line approximately. Make sure you put an arrow in here, which is what I do. And once it hits close to the goal line, just take the trade. Look at your stop. It's only 7 pips. And away it went. And I told you, you're going to do pretty good Sunday nights. More than 50 pips. Don't ever sell here. This is the wrong cycle. TZ is at the top. There's the beginning of your cycle for selling. And there's your beginning of the cycle for buying. Very important. This magic indicator is a fantastic indicator. Really picks the tops and the bottoms. Okay, euro dollar is no trading. Pound Aussie. Let's get into the pound pairs. Again, this is the weekend, Friday, Sunday night. Once you see moving averages cross for the downside, then we're just waiting for the pullback. Make sure you're going in the direction. It'll help 4 hours and daily to be selling. Put a down arrow right here. So every time it comes back up to the goal line here, here, and all of these candles right here, you can pull the trigger. Let's say you get in about here with about 10 pip stop. That move there is 50 pips. I would be more than happy with that. And of course down here is 80 pips, depending on how long you want to stay in the trade for. Okay, pound CAD, not a good pair to trade. Let's check out this pound Swiss. Asian session, moving averages are bunched up here. Let's say that 4 hours. Daily time frame says to buy. Make sure you put an up arrow in here. First candle that goes above the goal line, and you're getting buy signals down at the bottom. Then all you got to do is wait for the pullback. Now if you drop it down to the 5 minutes, all of these wicks will be much, much closer to the goal line. So anytime you see red candle pullback, you can get in. Red candle pullback, you can get in. That move there is 32 pips, and it did top out with about 50 pips there. Okay, let's run a check on, let's see, pound yen. This is a very good pair to trade. Keep in mind that if one of the yen pairs is going up, they all should be going up as long as the yen pair is the bus driver, like the one that's moving, or has the strongest number, like on the meter here. So first candle that clears the goal line, and we have buy signals down at the bottom. All the bars are blue, TZ is going up, and the AO's above the water line. Goal line is, well, by the time you would take the trade over here, the goal line's going up, so that qualifies for a great way to trade. Just wait for the pullback anywhere around here. Stop is 10 pips, and that's producing over 100 pips there. Let's see if we can find another trade. Well, you will have days like this where the moving averages are crisscrossing back and forth again here. Now, if the daily or higher is telling you to buy or up, you would put an up arrow right in here. First candle that actually clears the goal line with buy signals down at the bottom. Look at that. Everything is perfect. Blue. So you're going to pull the trigger on the goal line here, or here, or here. That's where you're going to take the trade. Let's say you take it here. And at that point, it qualifies for a great way to trade as the goal line's going up and the AO is above the water line. You're in with a 10 pip stop, and it did top out with 67 pips. Remember, don't ever buy here, or you're not going to be a happy trader. You're going to lose. Remember, best place to take the trade is as close to the goal line as possible. Okay, love the pound yen, so I'll show you another example. Moving backwards. Asian here, goal line is going down, moving averages are in order. We're below the water line here on the AO. Qualifies for a great way to trade. If the higher time frames are saying to sell, put a down arrow. Just wait patiently, follow the TZ up, and in real time you may consider that this is good enough. But remember, this pound yen really moves a lot, and that's 30 pips. So if you wanted to wait till the blue candles are completed, red candle, and get in on the right at the goal line or here. Stop is 27 pips, and it did bottom out over here with well over 200 pips. Very good risk to reward ratio. Okay, the only other one I can try 4x is pound New Zealand, because pound dollar is not the greatest, and neither is the dollar CAD. Remember, if you're doing Asian, you can change some of these pairs. You can do other yen pairs or other New Zealand pairs. You can pick whichever pairs you want to trade. Here we go, pound New Zealand. So let's assume, now if the daily trade plan says, let's say it says up on the 4 hours, and then down on the daily. That's mixed signals. Now, it's not written in stone. It's not 100% guaranteed all the time. But many times it'll go in the direction of the 4 hour first. When it hits resistance, the daily will kick in and pull it back down. But no matter, doesn't make any difference. You're looking for the TZ near the bottom when you're buying to go up. And when you're selling, you're looking for the TZ to be at the top, working its way down. So we have a lot of buy signals from here, actually back here, but you have to wait till a few minutes after 5. And then of course the moving averages are getting closer and closer together. So if you want to pull the trigger basically right on the goal line, let's say you did it here. Remember, we're going in the direction of the higher time frames with a 15 pip stop. And it did top out here with about 60 pips. And of course, if the daily and the weekly saying to sell, you can go the other way. Now sell signal comes right here on this candle. So as soon as it hits red, because you don't want to get too far away from the stop, which is about 22 pips, and that's like 35. If you're happy with that, just close the trade. But as you can see, it kept going down. Okay, let's see if we can find another example. The previous day, look at that. Don't have to look too far. Look at this. Perfect look. Moving averages are going up. We're above the waterline on the AO. Qualifies for a great way to trade. Daily trade plan for sure will be saying at least 4 hours in daily to buy. So put an arrow right in here, quite simple. Every time it comes back into the T area. So in other words, all of these candles, including this one, this one, this one, get in. Let's say we get in here. Go straight down. Our stop is about 14 or 15 pips. It did top out there with 86. And if you hung around a little bit longer, you can get more than 110 pips. But if generally as a rule, if I can get 20 to 40 pips in the Asian time frame, I am good with that. Well, let's try £1 more, another trade example on the pound New Zealand. Let's try another day. Well, look at this one. Here's the weekend. Very clear that the goal line and the moving averages are going up. And look at how big these bars are. Bigger the bars, the better, as it shows a lot of volume and a lot of volatility, a lot of traders trading. So check your daily trade plan. If the 4 hours daily or even higher says to buy, put an up arrow right in here, but you must wait. Now in real time you might catch this one right here. Your stop has to go there, 15 pips. Only went 8 pips against you. So either here, 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 or here, we're in. Same thing here, 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 here. These are all entries. Let's say you pull the trigger there. There's your stop, 7 pips. And it did top out with about a little over 50 pips. Excellent, excellent. And of course, every time it comes back, well, you know the magic word by now. Pull back and take the trade as close to the goal line as possible, which pumping out 71 pips. So now we can move on to the futures. It pays more and moves a lot more than Forex. Now if you freak out doing the pound pairs, well, I suggest you stay away from these futures, gold, oil, and whatnot. As just as easy as you can double your account in one trade, you can, if you're not careful, you can actually blow up your account. But I wouldn't let the trade keep running and running until you actually get a margin call. Because if it's not going to go up, well, guess which way it's going to go. Usually, it'll go the opposite direction. So here's a good example right here. Moving averages cross here. And every time it comes back, well, you know what to do. So if your daily trade plan is saying to buy, put an arrow in here, up arrow. This is your pullback, that's the magic word. And you're going to get in as close to the goal line as possible. So all of these candles are acceptable. If you pull the trigger here, stop is 50. And don't worry about that because, you know, whereas Forex, you can get away with 10 or 20 pips. This one here is going to be more than that. And of course, all the way across the top is well over 200. So risking 50 to get 200 is a very good return. Found another good example on crude oil. You're going to find many trades every day, all 3 sessions. All the way from way back here, very clear that the market is going up. Goal line's up. We're above the waterline on the AO. Qualifies for a great way to trade. Now if you dropped it down to the 5 minutes, these candles here would be approximately at this location. Here's your pullback. You're jumping in, and whatever your stop may be, could be 20, could be 30, and it did top out with 265. All the way up to there is 280 and change. Now if you did one standard lot times $10, 280, that would be $2,800. You know, very good payday. You know, with that kind of money, you can actually quit your day job. Okay, keep in mind that the DAX 30 Asian session market's not even open. So let's move on to the Dow Jones. From this point right here, moving averages cross. Goal line's going down. Look at how big these bars are on the AO. Qualifies for a great way to trade. Remember, don't sell here because you're going to be down 230. So just wait and wait. First red candle, once it gets closer to the goal line, stalling out for more than an hour, just get in the trade. Look at your stop, 77. And of course, all the way to the bottom down here is like around 500. And of course, if you take 500 times $5, that would be $2,500. Not bad money at all. Okay, gold. Now gold pays, let's see, $10 a pip. You can see, let's see, moving averages are all in order right around here. Right here. Now if the daily trade plan says up, so we're going to put an up arrow. Now remember, you must wait for the pullback. Here it is right here. Once it gets around the goal line, pull the trigger with a 10 pip stop. Not too bad. Now you're risking 10 pips, and to here alone you're getting 84. And for me, I would just close the trade and be happy, because 84 times 10, that would be $840. I would be okay with that. Let's see if we can find another gold trade. Now you will have days like this, but as soon as you see the 3 moving averages cross and your plan says up or buy, put an up arrow. Now if you drop it in real time down to the 5 minutes, all these candles will be about here. I can't, oh maybe I can. Let me see if I can do that. And I'll actually show you. I'll put a line, let's say on this pullback right here. Then you got to bring this little tiny cursor right here, bottom left corner, as soon as I can catch it. It's called fixed chart position. Whoops, didn't get it. Bring that little cursor to the line. And then you're going to drop it down to the 5 minutes. And hopefully, now we got to find this line on the 5-minute time frame. Oh, see how it kept it? Perfect. And then remember what I said? the candles will get closer to the goal line, and I actually knew that it would be actually closer to the red line. So you're going to pull the trigger anywhere in here. Stop is about 18 to 20 pips, and away it goes for a lovely 124. Let's say 120 times $10. That would be $1,200 if you did one standard lot. That's what I like about this little cursor here. Every time you change the time frames, it'll keep it in the same spot. Go back to the 15 minutes. Now I can remove that. Don't need that anymore. Let's check out the NASDAQ. It pays $20 a pip. Once you see the three moving averages cross, goal line going down, look at these bars, how big they are. Qualifies for a great way to trade as it's below the water line. You must wait for the pullback. Don't sell here because you're going to be down about 120 pips. So once it starts to die out, and if your trade plan says to sell, say 4 hours daily or higher, you're going to get in the trade. You're going to put in whatever you're comfortable with, say 30 pips, and down to here alone is 80. Remember, you're going to remove the last two digits. And if you manage to stay in the trade and kept an eye on it, you could have actually got around 250. And by the way, that's the magic number. That's exactly what you need if you want to double your account. So each tick is $20. 20 times 250 is 5,000. And of course, if you did one standard lot, which you can do with a $5,000 account, that move right there would have doubled your account in one trade. And of course, if you have any questions about how you can double your account in one trade, well, quite simple. Just get in contact with me. Let's run a check now on Russell. Russell does pay $10 a pip. Moving averages cross. Goal line is going down. We're below the water line on the AO. Just follow the TZ. In other words, that's the beginning of the up cycle. In other words, up, don't sell. You buy on the up and you sell when it's at the top. So buy, sell, quite simple. So if the trade plan says sell, you must wait for the action in the T area or as close to the goal line as possible. Stop would be about, let's go with 30. So you're risking 30. And if you hung around long enough until it died out, you're looking at about 350. And 350 times $10, if you did one standard lot, that would be $3,500. Excellent payday. Let's check out this S&P 500. It moves a lot of ticks, and but unfortunately it only pays $5 on each one. So you can clearly see, take a picture of this, clearly see goal line going up. Look at how big these bars are. When I see this, I'm 95% sure I'm going to make some pips. Trade plan, let's say it says buy, and it really should. 4 hours daily minimum. You must wait for the pullback. There it is right there. You're going to pull the trigger anywhere across here. Put whatever stop you want, 20, 30, 40. Doesn't make any difference. You're going to have a winner. And that's about, let's see, 180. So 180 times 5. 5 times 18, 40. That would be $900 if you did one standard lot. Not too bad. Silver, another one. Now you're not going to get hundreds of ticks, but it does pay $50 for each tick. Very clear. Goal line going down. Look at this. Qualifies for a great way to trade below the waterline on the AO. There's your pullback right there. And all through here you can pull the trigger. Let's say you get in here. Stop is 6 ticks. To this point right there is 22. Let's say 20 times 50, that's $1,000. If you hung around for more, that's 40 times 5, that would be $2,000 if you did one standard lot. Okay, let's one more to go here. 30-year bonds. This one doesn't pay as well. It's only $5 a pip, and it doesn't really move a lot, but here we go. Once we see the moving averages cross, and let's just say the daily's saying to sell. So once it clears the goal line, there's a sell signal. Wait for the pullback as close to the goal line as possible. And on this candle, everything is red. Sell signals. TZ is going down. You're in with a 14 pip stop, and it did bottom out with about 90. Now, of course, if you ended up with 90 times 5, that would be $450. So we're at 31 minutes. Time to wrap up this video. And of course, if you have any questions, quite simple, just get in contact with me. And if not, good luck with your trading, and we'll see you in the next video.